Hello, and welcome back to Coin Lady channel. The purpose of this video is to provide a brief overview of the heading into the following week after Bitcoin ETFs. The crypto markets are anticipating what lies ahead. With the initial excitement and fear of missing out fading, the crypto market is currently in the red, with most assets falling 1 to 2% and some falling much more. Many are pointing the finger at Grayscale, whose fees are exorbitant, for this situation. Bitcoin is, of course, moving off the shelves. Fidelity, BlackRock, ARK, and every other exchange-traded fund, ETF, out there are all engaging in offset purchasing. As far as I can see, it isn't the consequence here. That is being promoted, I'm sure of it. That being said, it is anticipated. There was a great deal of excitement because of this major event. As we enter the Bitcoin refuge, we will now observe our cruising altitude. It is the next major development to keep an eye on. This has the potential to transform everything. Yes, this does in fact occur. Plus, I just cannot fathom it. Still, many of my acquaintances are expressing optimism that this may work. According to a legal expert from Bloomberg, Coinbase's chances of a complete dismissal in the SEC action are 70%. Given the magnitude of the case, I have faith that the court will allow it to proceed. Moreover, I am certain of the day's conclusion. By whatever measure, Coinbase emerges victorious. Yet, it does not occur for a long time. If this case ends in dismissal, the SEC will be effectively removed from the cryptocurrency market. No impending event, in my opinion, could be more bullish. This is where we will discover the outcome. After his time in court, legal scholar Elliot Stein had a far more positive impression of crypto exchange Coinbase and his prospects of winning. Almost everything Coinbase offers here will have nothing to do with security, in my opinion. Yes, there are a few things that they will undoubtedly face criticism for, but it's likely to be on the small side. When you're involved in a legal dispute, the majority of these tokens shouldn't be considered securities since that's how he thinks businesses should operate. It's never without danger. Although I am certain in the long run, the issue remains, will they be able to get a dismissal? According to Stein's prediction, there is a 70% possibility of the swap, and a full dismissal of the lawsuit. All things considered, that is the trading stake. There is no nicer man than Gary Gensler, so good night if that occurs. He began by saying, I went into the SEC versus Coinbase hearing thinking Coin would on this motion win dismissal of SEC's primary clients. That alone, that would be a game changer for cryptocurrencies, but maybe not staking and broker client. He exited the hearing thinking Coin would do well when a full dismissal occurred. So, this is only the opinion of one analyst. What this shows us, though, is that Coinbase is in a stronger legal position than anyone else. Here we hear the judge relentlessly criticizing the SEC, who, once again, are just making stuff up as they go along, and who have no really good reasons. Unfortunately, as with any court matter, a judgment from the judge will likely take some time if this occurs. What then does the SEC do if we obtain that? The outcome would be decided in an instant. Let us hope and pray. But hey, we're here for the long haul, so even if that doesn't happen, we'll still come out on top. So, this shouldn't really slow us down in the forthcoming bull run. However, a decisive victory at this stage would serve as a significant impetus. Despite the fact that it is against the law in China, a large number of Chinese consumers are evading the country's crypto prohibition and investing in the cryptocurrency market. By using social media and a variety of payment channels, Chinese businessmen are finding innovative ways to get around the crypto prohibition. As I've mentioned before, many of these restrictions don't care about us crypto enthusiasts, like we'll never have to worry about losing access to these tools. Isn't the point to get everyone on board? The ability to effortlessly attract new consumers and capital is key. Yet, by continuing to do these things, we are effectively recapturing that genie. No matter how many regulations they attempt to impose, we will prevail. Here in China, we can observe that strategy in action. Cafes and laundry mats are becoming popular gathering spots for crypto enthusiasts to trade cryptocurrencies. According to a new survey, crypto activities are still going strong, and China is now the third most active crypto market in Asia. In other words, it's against the law in China. Nothing is being prevented. The level of activity emanating from their nation is still rather high. Now, there's no denying that the space would explode due to the influx of capital that would ensue if crypto trading were to be legalized and regulated. However, the purpose of these decentralized networks is that you cannot stop us. No matter how many rules you pass, no one will be able to stop others from utilizing it. Why BlackRock is not planning to launch a Ripple XRP ETF is the subject of this article. As I was reading through everything, I saw that BlackRock is staying away from releasing a Ripple XRP ETF because of all the regulatory uncertainties that surrounds XRP. Even if Ripple has won the lawsuit outright, there may be an appeal that says there's still a chance of anything bad happening if the case is still continuing, and I can understand why a firm like BlackRock or Fidelity would be hesitant to join involved. Nevertheless, I still do not think that is the reason why an XRP ETF is not available right now. I am still trying to figure out who is behind this. Plus, we may observe that Judge Torres recently categorized XRP. It does not clearly fall into either the security or non-security buckets, creating a regulatory gray area. Additionally, whose words were these? Our good friend Charles Gasparini is here. This idiot, oh my. I mean, come on, it's the law of the country. XRP is very clear. Rest assured, XRP is not classified as a security. Is XRP affected by the fact that lawsuits are still ongoing? Sure, I'm certain. More significantly, though, I do not believe there is sufficient demand for a BlackRock Fidelity to launch an ETF product at this time, even if that were the ultimate aim. It seems like it wouldn't work, to be honest. At this very moment, is Bitcoin there? Beyond Ethereum, it's likely that no other cryptocurrencies are now prepared for use. That will change, though. For now, we're only testing the waters to see how much demand there is for Bitcoin alone. Eventually, it will spread to the whole crypto market, and an XRP ETF will be available. We will proceed to expound upon it. An XRP ETF is unnecessary at this moment. We are undoubtedly being hindered by the pending judicial case. Even if it disappeared today, I really doubt they would launch an ETF just yet. It will definitely occur. Have some patience. Additionally, you will observe ETF activity in close proximity to several of your preferred main cryptocurrencies, such as Cardano, Polkadot, or whatever else you desire. Here we have another Alan B. Watts, Bitcoin Watts, I don't know how you pronounce his name, who casually dumps 10 to 25,000 Bitcoin daily. This could wind up being the largest lead ever lost by Bitcoin, and all because they refuse to lower their fees. I hear a lot of people saying, don't worry, they can lower their fees down the road. Well, they are already losing ground, so there's no point in trying to catch up. Someone will likely jump up here and gain all the trading volume. Most investors will use them to trade Bitcoin ETFs, and unlike other markets, there won't be any 3 equals or 4 equals involved. Since when has Grayscale done this? I believe it's because such costs are necessary for them. Taking a look at the conglomerate, the digital currency firm, whose name escapes me, we can see that they are in deep distress and could really need some cash. Therefore, they would prefer to sit here and collect large management fees and cash flows immediately rather than play the long game and win. It seems like you're seeing the liquidation of a failing enterprise. Grayscale alone won't be able to sustain their empire in its current state, therefore they'll need to maintain high prices to keep the lights on. Their cheap starting costs would have given them a significant competitive edge, along with a large quantity of Bitcoin and the familiarity of their name and brand among investors. Instead, they are not going to survive in the long run, and you will likely see their demise. However, it is simply not feasible to do so, due to the fact that such payments are essential for maintaining the remainder of your empire. They cover things like legal bills, assets being sold off at a rapid pace, and items that have gone bankrupt. They are unable to take action because of this. Regrettably, they are unable to reduce such prices. And eventually, there will most likely be no more Grayscale. I find it unfortunate since they seemingly set the stage for us to follow in their footsteps. They went to court to get approval to establish a Bitcoin spot ETF, and as soon as they did, the major players swooped in to steal his market share. It was a foolish concept that should have ended there. They should have kept their money and their confidence. No way Grayscale will make it through this. As a concluding point, I mentioned that we had discussed the possibility of a major market trigger in the event that this coin-based court action was successful. As I've already mentioned, commercial real estate is causing problems for the banking industry. However, as you may have noted, this is only the beginning. Unfortunately, Sports Illustrated is likely to fail if you simply look up layoffs online. The magazine has spiraled into anarchy due to widespread layoffs. With the recent closure of 5 locations, Macy's has laid off almost 2,300 employees, setting the stage for further rounds of layoffs. Google and Amazon both lay off large numbers of employees, so it's no surprise that big tech is also affected. There will be a domino effect from this. Things become ugly, especially when there's a major issue in the banking or real estate industries. A crisis isn't actually 9 and 10, you know, if you recall. Suddenly, everything changes for these folks. Additionally, there will be massive layoffs and no individual firings like the ones we're seeing now. The world will be very different tomorrow when you likely get a better job and express your gratitude for being fired. Be wary of drivers like these. Just because these kinds of things are sure to have an impact on crypto prices doesn't imply we can't recover and still experience a fantastic bull run. This type of thing may be troublesome, though, as you saw with the pandemic, at least in the short term, and then soon after an occurrence like that, you saw prices crash. I wanted to start this year by seeing where we stood after the first quarter, so that's why I stated that. Things are more precarious than most people would want to acknowledge, in my opinion. Finally, a handful of anecdotes. This is really insignificant. Very few businesses are laying off large numbers of employees. It may become an issue, though, if this pattern persists. Be sure to monitor it. That is my entire point. Put on your armor, get yourself ready to weather the storm, and be prepared to keep piling up wealth. When we see that occurring, it's because most people aren't prepared to travel and don't have any money sitting on the sidelines. Even with these inflated valuations, they refuse to pretend to be in worse financial shape. Sometimes people have to sell their cryptocurrency at all-time lows because they need cash. Such things are not what you desire. Keep in mind that this is a possibility. In particular, given the current state of the cryptocurrency market, you can witness some bleeding prices. I will not be moving my primary positions through trading. Just so you know, I'm not claiming it's going to happen, but it can. Tell me what you think in the comments. Please subscribe and like as always. See you soon, bye.